What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today, we're getting into one of the most brutal battlefields when it comes to business. That's the Chinese EV market. So we're gearing up for a super interesting, super insightful episode. If you're new to my channel, if you're just seeing me for the first time, make sure you hit that subscribe button. Now, I'll be upfront with you. I'm a NIO bull, but what we're seeing right now, it transcends any stock pick. We're witnessing a Darwinian struggle where industry leaders are predicting that only 5 to 8 EV companies will survive. Let me repeat that, from dozens of players down to single digits. So buckle up, because we're about to explore 3 critical developments that paint a picture of desperation, innovation, and a raw struggle or fight for survival in what might be the world's most competitive market. Let's start with what I call the canary in the coal mine, NIO's sub-brand Firefly. On the surface, launching a battery as a service program sounds like a standard offer, but when you dig into the details, this could signal desperation. Firefly just slashed their entry price by around 33%. It's now at 79,000 RMB. That's a 40,000 yuan drop in price. The kicker, their battery as a service was originally scheduled for August 1st, but they moved it up by over a month. In business, when you accelerate your pricing strategy, that typically signals that the house could be on fire. It doesn't mean that it is, but it signals that it could be. Let's look at the numbers. Firefly delivered 231 units in April, their launch month. May looked better at 3,680 units. But here's where it gets concerning. Early June data shows that they're tracking at around 500 to 440 units. That's per week. That's roughly 2,000 units monthly. So we're talking about a dramatic deceleration. Now, the battery as a service model is brilliant. Consumers pay 399 RMB monthly for a battery rental, which eliminates the biggest fear of EV ownership, and that's battery degradation. It's the Netflix model applied to automotive. Here's the thing, when you're forced to deploy your best strategy ahead of schedule, it suggests that the market isn't responding to your product as expected. The broader implications here are massive. NIO's sub-brand, one of them focused on the mass market, is struggling this hard. What does that say about the entire ecosystem? Remember, NIO has spent years building out their battery swapping infrastructure. They've got the technology, the ecosystem, the brand recognition. If they're struggling in the small EV segment, imagine what smaller players are facing. Now let's flip to the other end of the spectrum, the high-end pure electric SUV market. This is where things get really interesting from a strategic perspective. Li Auto just declared their intention to compete head-to-head with the Tesla Model Y through the release of their new i6 model. But here's where things get interesting, and what caught my attention: they're launching both rear-wheel drive and dual motor configuration. The single motor version packs 250 kilowatts of power, while the dual motor adds 150 kilowatts to the front motor. Compare that to XPeng's G9. Their rear motor hits 258 kilowatts for the front motor. So clearly, Li Auto isn't trying to win on raw performance. Instead, they're betting everything on charging infrastructure. The entire i6 series comes standard with 5C lithium ion phosphate batteries and an 800 volt architecture. That's 500 kilometers of range with just 10 minutes of charging. And here's the infrastructure play that blew my mind. As of June 5th, Li Auto has deployed 2,451 supercharging stations nationwide, including 830 high-speed stations. They're building a Tesla-level charging network in China. That's not just productive development, that's ecosystem warfare. Meanwhile, NIO's doubling down with their new ES8. This isn't just a refresh, it's a complete reimagining built on their NT 3.0 platform. And the dimensions alone tell the story. 5,280 millimeters long, 2,010 millimeters wide, 1,800 millimeters tall, with a 3,130 millimeter wheelbase. So with this car, they've increased the length by 181 millimeters and the wheelbase by 60 millimeters. But here's where things get technical. They're packing a dual motor system with 180 kilowatt front and 340 kilowatt rear motors. That's some serious power. However, the curb weight jumped from 2,565 kilograms to 2,630 kilograms. Physics is physics. More weight obviously affects handling and efficiency. What fascinates me is that strategically, Li Auto and NIO are both using essentially the same playbook in a sense, launching high-end flagship models to create halo effects, and use that same technology and brand cachet to drive sales of more affordable models. It's the big leading small strategy. The question is, can this work in a market where Tesla Model Y is dominating and brands like Xiaomi are gaining buzz without trying as hard? The answer to this question will determine whether Chinese brands can dominate globally, or will they just be regional players? Now, perhaps the biggest narrative in this regard of 2025, XPeng's journey from the ICU to profitability. CEO XPeng wasn't mincing words earlier this year when he said that they were still at the doorstep of the ICU. That's not typical CEO speak, that's raw honesty about an existential crisis. But look at the turnaround. Q1 2025 deliveries hit over 94K units, which is a 331% year-over-year increase for the company. More importantly, their loss for the year dropped from about 30,000 yuan in 2024 to just 7,021 yuan in Q1. That's the power of scale and economics in action. The catalyst, well, it's their Mona ML3. Priced at just over 100,000 yuan, it's consistently represented over 50% of their sales. XPeng's average selling price dropped from over 200,000 yuan to 150,000 yuan in Q1. So they essentially saved themselves by racing to the bottom on price. But here's the strategic dilemma. Cost effectiveness can save your life, but it's also a trap. The Mona ML3's May sales dropped to 10,900, and prior to that they had an average of over 1,500 for the first 4 selling months. That's a 28.92% decline. When your lifeline starts fraying, you've got problem. XPeng's response? Well, it was to launch the G7 with a pre-sale price of 235,800 yuan. So this is their attempt to climb back up market and rebuild brand value, but they're walking into the most competitive segment imaginable, going head to head with the Tesla Model Y and the upcoming Xiaomi YU7. The real test for XPeng isn't just profitability by Q4 2025. It's whether they can build lasting brand equity while maintaining their competitive advantage. That's incredibly difficult in a market where survival itself is not guaranteed. So what does all this mean for investors in the broader technology landscape? First, we're witnessing the natural evolution of a hyper-competitive market. The early days of build it and they will come, those days are over. Now it's about execution, infrastructure, and sustainable business models. Second, the Chinese automotive market is becoming a global laboratory for EV makers all over the world. The strategies being tested here, from battery swapping networks to AI integration in cars, that will determine how the rest of the world approaches electrification. Third, and this is crucial for investors, market leadership today doesn't guarantee survival tomorrow. Tesla's China sales dropped by 15% year over year in May. Even the king of EV isn't immune to competitive pressure. As a NIO investor, I'm watching these developments closely. Yes, Firefly's struggles are concerning, but NIO's focus on the premium market and their battery swapping network could pay dividends in the future. Battery swapping technology and premium cost positioning differentiate them in ways that price or cost alone could never. But the broader lesson here transcends any single stock. We're seeing the real-time evolution of one of the most important industries of our generation. The survivors won't just be the cheapest or the most premium. They'll be the ones who can adapt the fastest while building sustainable, competitive business models. The battlefield is set and the players are committed, but also the stakes couldn't be any higher. This is where fortunes are made and lost, and we're just getting started. Anyways, that's a wrap on today's episode of Courtside Financial. The EV market isn't just a story about cars. It's a masterclass on competitive strategy, technological innovation, and market dynamics. Whether you're invested in this space or just fascinated by business, keep your eyes on China. The lessons here will shape future industries beyond automotive. Thanks for listening, and I'll catch you guys all in the next episode. Again, good to be back, getting back into my flow of research, recording, editing, and uploading. Great to be home. Thank you. Obi signing off.